Lobo Tiggre of the Independent Speculator joins us today to talk about his economic and market outlook. Lobo, I've spoken to a lot of economists. One of them had told me, a couple of them had told me that we're going to get a crash right before the election, which is only 2 weeks away, both in terms of equities and precious metals. What do you think?
Well, one, I'm very sympathetic to the crash perspective. I've been trying to build cash in anticipation of that. I'm less certain about the timing. I'm not even convinced that it has to happen at all. There's a lot of easy money flooding into the market space, so it's not a sure thing. Maybe that's the first and foremost thing. I agree with the logic of it. I saw your interview a couple of weeks ago, and I couldn't disagree with anything the guy said, except I can't quite convince myself it's a sure thing before the election.
Well, one of the things that the economists have told me is that if we get a crash, a market-wide crash, is that gold could also fall along with equities. What do you think?
I agree. There was a sense that this wouldn't be true after the big crash earlier in March. There was a lot of leverage squeezed out of the system, and people were thinking, well, that's done, right? That liquidity crunch means it's behind us. And so if there's another big meltdown, it won't affect gold and silver. Those sellers have already sold. That might have been true earlier this year. I don't think it's true now. There's been so much money come back into the sector and a lot of generalist attention into the gold and silver space specifically. And I would not expect those guys to be anything other than fair weather friends. So if there is a big market meltdown ahead, I don't think that gold and silver will be immune from that. Now, that doesn't mean I'm going to sell now. Here's, of all the different things we could say about this subject, the number one thing I would want to communicate is that I personally am not selling anything in front of the crash. Now, I'm not in mainstream equities. I'm mostly in gold and silver stocks that I think are going to do well regardless, and I would be happy to buy more of if we have a crash. But all that easy money that I'm sure we'll talk about in inflation, deflation, all these things, all that easy money that we know is coming is so bullish that it's possible that we may not get this crash. It's possible that that will just push things higher. And I would hate to sell now out of fear of a crash that doesn't happen and then watch all these stocks that I really believed in take off without me. So rather than sell in front of a possible crash, and I agree, the possibility is quite distinct. It's there. It's in the cards. I don't know how imminent, but I see it as a real threat. But I'm not selling anything now. I'm just making sure I'm in things I would be happy to average down on if we get the chance. I'm building cash. And if not, at least I still have my finger in the pie.
Well, wait a minute, Nobo. 2016, the presidential election, I don't know if you remember it, but gold actually sold off in November following Trump's election victory because the dollar was strong. So let's assume that he gets reelected for the sake of argument. Could that happen again?
I think could happen. It's a very peculiar thing, though. Take a look back to the fuller context of that election. It was so memorable. It was so bizarre that when Trump was rising in the polls, that actually was bearish for gold. He was seen as so destabilizing and, an outsider, and he was going to upset the apple cart. It was frequently you saw the gold go higher when Hillary went higher in the polls.
I mean, that's interesting because Trump was considered a wild card in 2016. Analysts weren't really sure what his policies were, how they would affect the economy. And under such circumstances, wouldn't you expect safe havens like gold to rise?
It's multivariate. If it's a safe haven, you would think uncertainty would drive. But if you're thinking monetary policy and what's this going to do to the dollar, then that's a different driver. And we see that in action today. But let me just finish my story. And I think it's really important for people to remember since you brought it up. Right up until the moment where it seemed like Hillary might actually lose, gold was rising. And then there's this big reaction when Trump gets elected and this big sell-off. And then he gave a talk. And the big fluctuation I remember seeing was when he gave his acceptance speech. And he sounded really presidential. It wasn't this wild and crazy Trump going to come in and crash the system and change everything. It sounded kind of reasonable and like, maybe things are normal. And then that's when things really turned around in the market. So I would say that's a really unique circumstance. It's possible that Trump could change in a second term when he's no longer worried about re-election. But I think most people have a pretty good sense of who the players are right now. And if we want to just sort of put a capstone on this whole election question, I think the most important thing for people to keep in mind, and I think this is really important, is that it's, the spend or spend more choice. There is no austerity choice really on the table right now. I suppose if if lightning struck twice and the Libertarian candidate won, maybe there would be more fiscal restraint on the federal government's part. But that's really not likely. The choices we have are 1.8 trillion, 2.4 trillion. How many trillions more are we going to throw at the current context? So I think a lot of this hullabaloo about the election is overdone. I'm not saying it's unimportant. I'm not saying that, if you have strong ideological reasons for favoring one or the other, that it doesn't matter. And, but in terms of gold, the price of gold and monetary policy, it's baked in the cake. Either side wins, there's more easy money on the way, and that's extremely bullish for monetary metal.
Right. So what's the thesis here? Is that with more stimulus, the dollar is going to go down, get devalued, and then gold's going to go up? Is that the rationale here?
Yes and no. I'm not one of these uber dollar bears like some other Puerto Ricans who remain nameless. I get that. I actually understand that argument, and I agree. Yes, you're debasing the currency; its value is going down. But other people are doing the same thing. Never underestimate the desperation in the race to the bottom of who can debase their currency fastest. And rightly or wrongly, until the dollar is really shaken off its foundations, it does have that reserve currency status holding it up. And that gives the U.S. the ability to export its inflation and devaluation, as it were. So what I'm trying to say here is that, yes, the dollar is being debased, and yes, that's bullish for gold and silver, but so are other currencies. So don't necessarily expect that to show up as this huge move in the forex markets that may or may not happen. And even if it does happen, that gives the other guys an excuse to print more too, so it can be temporary. So my thesis isn't really going to be visible on the DXY exchange. It's just debasement of currencies is good for real assets, particularly real money.
What about inflation data coming out of this week? We saw on Tuesday gold drop by more than 1%. Did that have anything to do with CPI numbers?
That was the only proximal cause. If you look at other headline news at the time, there was Johnson & Johnson putting their COVID trials on hold. There wasn't anything really bearish for gold that came out. It was just the CPI number. And it was kind of, well, in the first place, it's a monthly CPI number. It's an initial CPI number. Who knows how it'll be revised? And anybody who imagines that a monthly fluctuation in CPI, if it's even real, means that the easy money is done, or that all these trillions of dollars that both sides are talking about are not going to have any impact. I just think that's a huge mistake. I do understand that there is more to consumer price inflation. We're talking CPI, not monetary inflation. I understand there's more to that than money printing. You have the velocity of money and other factors. But money printing is a factor. And it's not just any money printing, it's direct subsidies to consumers that we're seeing. I was just talking to a friend of mine who's a hotel manager. All his employees are collecting more now on unemployment still than they were working for him. He says they're buying new cars.
Well, the CPI was up 0.2% last month. It's still a positive reading. So why is gold taking it negatively?
That's what I'm saying. I think it's a knee-jerk reaction. I remember that the traders in New York and London who have first impact on the market, they have a very mainstream mindset. They're not like you or me or our stacker friends out there. They think in terms of mainstream economic models. So less inflation. If gold is your hedge against inflation, I mean, that was the argument that some of these big banks that have come out pro-gold and making higher gold price projections. It's the inflation question. So if inflation goes down, and that's what you think is the most important thing for the price of gold, then you might sell. But I think it's wrong, it's short-sighted, and reality will reassert itself.
Okay. You mentioned Johnson & Johnson. This is a question I've been getting from a lot of viewers coming into my inbox, is what's going to happen to gold should a vaccine be introduced?
I think this is another one of these overblown things. Yes, we have seen gold move on vaccine headlines. I don't deny that. But it's a mistake to think that 2020 gold is all about the vaccine. Oh, the COVID hit, or not even just vaccine, but the whole COVID situation and the market meltdown that we had and the uncertainty that it's all about the COVID-19 outbreak. That's not true. Despite the disappointment in 2016, the bottom so far was in late 2015. And we have been on a volatile upward trend since late 2015, well before anybody even thought about COVID. But even the more recent and dramatic upturn started after the Powell pivot. This is really about monetary and fiscal policy, starting, first and foremost with monetary policy. It's about negative real rates. And so, okay, less inflation, might seem to reduce the negative real rates a little bit, but we're still looking at negative real rates. There's no question. And that all started long before the whole COVID situation. So I'm not saying there's no COVID tailwind. I'm saying that's not the fundamental driver. And if there are 27 great vaccines tomorrow, everybody goes back out eating and going to movie theaters and flying. Everything's fine tomorrow, which isn't going to happen. It's going to take months, if not years, to get back to normal. But even if that did happen, that would just mean that extra tailwind goes away. It doesn't change the fundamental monetary and fiscal reality that we're in and will be in, I think, for years to come.
Well, I think a lot of it could be psychological. Investors just might feel safer with a vaccine being introduced. Whether or not it's actually being consumed or taken by the populace is a different story. Whether or not it's going to have an impact on people going out is a different story, but I think it's just psychological, right?
Yes. So those are temporary and fleeting things. You can see knee-jerk reactions to things like this. As you and I are speaking, we have this knee-jerk reaction to this really, I think, insignificant change in CPI data. But so if we hadn't started this conversation talking about the possibility of a big crash, I would be saying these are just great buying opportunities. So if you're concerned about a bigger market crash, you may not want to buy every dip that you see now. If you're convinced that there's going to be a big market crash and that's going to hit even gold and silver, then you do not want to be buying the dips now. But if you're not sure of that, if you think that it's unlikely, then things like this, where people knee-jerk drop gold and it has a big impact on the gold stocks on some really not terribly relevant vaccine news or something like that, then that is a buying opportunity. And once the fear of the crash is behind us, then anything like that where things sell off for the wrong reason, I'd be happy to take that buying opportunity.
Let's talk about the long-term outlook for gold. Now, we're talking about several decades out. People my age, millennials, are going to become older in the next couple of decades and are going to become the primary investment base. Now, let's assume, for argument's sake, that millennials do not adopt a more positive outlook on gold and they do not adopt a more familiarity with a precious metal. And so if that's the case, if nobody in the future is going to be investing in gold and precious metals, what's going to happen to the industry? Capital is going to die off, isn't it?
Well, two things. One, I reject the premise. I don't think that it's realistic to say that millennials or anybody is going to ignore an asset that this year has been delivering in spades. They're seeing success in this space now. Why would anybody ignore that? But I also disagree with the fundamental idea that millennials are somehow immune to the awareness of the value that gold represents. I've said this before, and it may sound a little hokey, but it's true. You play video games, I'm sure, and your friends play video games. And half those video games, it's gold pieces that you trade back and forth. They don't use dollars or yuan or something in most video games. Those, you're playing in a medieval sword and sorcery setting or some futuristic setting. It doesn't have to be dollars, right? So you trade gold pieces, or even when it's not gold pieces, it's something that looks gold. Even Bitcoin, that logo of a Bitcoin, it's gold colored. I think people understand this. And I teach economics to young people around the world. And when I take an ounce of gold and I set it in their hand and they go, whoa, right? They can feel it. They can feel the reality of it. You can just see it in their eyes. It's not, who cares about this? This is only an old fart thing. They get it. They see that this is something real. And so you couple that with market action like this year, where people saying what's working. I think you and I have discussed, unfortunately, we don't have that, Robin track data anymore, but you and I have seen what looks to be solid evidence of millennials getting it, seeing what's working and jumping on the bandwagon. And already this year, so many gold and silver stocks have delivered spectacular gains, way above, the averages on Wall Street. I think that's a lesson learned. I reject the premise. But even if it was true, let's say decades from now, that becomes, when they're in their 40s and 50s, the power generation, and they have disdain for gold and silver. One, that's so far from now that we can make tons of money before that becomes a problem. Two, by then, they may have to chop 3 or 4 zeros off the US dollar, given where things are going by now. I suspect that anything real, let's say that demand for gold went entirely to industrial and jewelry uses, right? Like no investment demand whatsoever. There is still industrial demand for gold and jewelry demand for gold, and that would still be there, So at a point in time where the dollar has been devalued to where you're chopping off, threes or fours of zeros, any useful commodity, any useful metal will have some value. So 20 years from now, I still think you would be looking at a higher nominal price. And this business of gold's just a rock, like a pet rock, it has no use. It's simply incorrect. Gold is one of the naturally occurring 92 elements. It has unique properties, and it's uniquely suited for a lot of purposes.
Oh, well, okay, let's talk about that. There's a difference between interest in a precious metal and a piece of rock in your hand and actually putting money into the sector. I'm sorry to say, but I've spoken to a lot of my peers who are in the space, and they just don't care about gold and precious metals. So my question here is, what does the industry need to do to attract the largest transfer of wealth ever, to attract that capital into the space besides just video games? I mean, you and I have talked about Robinhood data. We've seen a huge influx of millennial traders into the gold price, but most of them were just chasing momentum. They were just, a lot of that was FOMO buying. It wasn't just they were interested in the metal. They were just chasing something that was going up.
But that's fine. I mean, that's the answer, David. We don't need to make gold bugs out of millennials. That's not necessary. All that's necessary is that we be right about the consequences on monetary metals of the fiscal and monetary policies we're seeing. Any investor who is neutral, okay, here's another way to answer, but let me finish. Any investor who's neutral on the subject, but they're looking for yield, as long as we're right, there will be yield. People will make money. People have made huge amounts of money buying the right gold and silver stocks, even if you hate gold and silver stocks. So here comes the other answer I was going to give you. The Warren Buffett blessing. Right? Warren Buffett didn't buy gold. I don't think he's changed his attitude about gold at all. His company bought a gold stock because it was gushing cash, and it was foreseeable that it would be gushing cash going forward. I think that's the answer. Warren Buffett doesn't love gold. He hates gold, but he understands a good business when he sees one. I think millennials are not stupid. They get it. And if they see a good business that's going to gush cash and pay them maybe a dividend or give, capital gains as well, why would they say, oh, no, that's just for old people? I'm not buying that great cash gushing business.
Finally, let's talk about your workshop at the New Orleans Investment Conference, the conference we're covering. You're going to be talking about the different asset classes to invest in besides gold. Can you give us a 1-minute summary?
Sure. 60 seconds. So I love gold and silver. I do think they're going much higher, but I can't really call them a bottom feeder opportunity today. So I have to look around, what is out there still selling cheap? My answers are uranium, of course. I love that it's hated, and I know that it's not for everybody, but it's hated. The low cost of production, when but not if question. I also believe in the electrification story. That brings us two primary metals that I like, copper and nickel. Not lithium, maybe cobalt, but copper and nickel definitely are contrarian plays still, and they're still relatively quite cheap, and I think they will have to go higher, when not if questions. And then finally, lowly, also hated, oil. I don't want to give you the wrong finger there. Oil is going away someday, but not anytime soon. And, it will take decades for everybody to convert to electric cars. I think oil prices, they're vulnerable in the near term, but I think they will be a terrific contrarian play for people with the guts to look at it.
Perfect. Lobo, thanks very much for coming on the show today. I appreciate it.
Sure. Thank you, David.
And thank you for watching Kitco News. Don't forget to download the Kitco Gold Live app for the latest updates on markets, analysis, prices, charts, and gold. I'm David Lin. Thanks for watching.